And so I got in roughly here on that rejection. Okay. And again, if you guys think I'm BSing, I'll show a screenshot of the actual trade on my live account. We basically had 8 weeks of verified results with the strategy, and we've had over a 70% win rate, which has been great. And I managed to live on stream secure like literally first a $26,000 withdrawal with Ascend X, and then an $18,000 withdrawal with Effexify. Yeah, it was close to about 45K, and honestly, been the best trading month of my life.
All right, folks, here we are on Trading Up. We've got a familiar face, Ethan Garland, in the house, back in the house, because he has dropped ICT and moved on to something different, and he's had the best trading month ever, 45K in 1 month. Welcome back to the show, Ethan.
Thank you very much for having me, Cam.
Well, folks, what you're not just going to hear a story as to why he ditched ICT and how he made 45K. You're actually going to get to see what he does on a price chart to make this happen. So to start off with, Ethan, maybe give us a bit of a rundown on why you decided to ditch ICT and move on to a new kind of strategy, and how that all how that transition happened and how it all flowed.
Yeah, so in terms of ditching ICT, it wasn't so much of a thing of it not working anymore. It was more of I just found the need to simplify and find something that worked with my lifestyle a lot more. And essentially what I ended up doing was really, really breaking down a very small window of time that works with a very specific pattern. And that's all I trade every single day. It takes me about 45 minutes to trade per day. And so I started to trade this more and more in conjunction with the kind of liquidity concepts / ICT concepts that I was trading. And I started to have really good results, and they were really consistent. And I was spending so little time trading this particular pattern that I ended up thinking, why am I even bothering to sit on the charts for 2 hours every single session trading ICT when I could just trade this pattern in this small window and have good results? And as a result, I've literally live streamed every single trade I've taken with my Discord. Every single trade's been recorded, and I have documented all of them in that Discord as well. And so we've basically had 8 weeks of verified results with the strategy, and we've had over a 70% win rate, which has been great. And I managed to live on stream secure like literally first a $26,000 withdrawal with Ascend X, and then an $18,000 withdrawal with Effexify. And so, yeah, it was close to about 45K. And honestly, it's been the best trading month of my life. I've got a $17,000 withdrawal that's pending, probably be due in the next week with Ascend X as well. And so honestly, like I couldn't have been happier with switching to this more simplified. Basically, it's just a break and retest strategy with very specific criteria. And honestly, I'm not looking back.
And for somebody who wanted to, like, I suppose, find this kind of edge in the market, I mean, what were some of the steps you took to identify this and, you know, randomly find this 45-minute window that just happens to pop for you?
Well, really, it's just looking for patterns that reoccur in the market at a specific time. Essentially, I was like, this is the period of time when the volatility is the most. And then I brought it down and kept refining it until, you know, I pretty much just had 45 minutes, and it was the most effective point of time to trade. So it really worked well. And then I started to break down some of the discretion in the strategy. There's no ditching all discretion in the strategy. There is still an element of discretion. But honestly, with the way that price moves, it's quite easy for you to see these specific levels to trade from. And all of the guys that are trading this strategy with me are seeing all those same levels generally, which is great.
Fantastic. Now, we're going to dive in, have a look at a price chart and see how this baby works. Now, if you're loving the show and thinking, where can I go and trade? Why don't you check out my prop firm sponsor, Blue Guardian. Now, these guys have been around for ages. They've been sponsoring Trading Up for over a year. And some of the key features that make them so good is that they've got realistic profit targets for their challenge phases. It's only 8 or 4%. They also have a scaling plan up to $2 million, and they do profit splits of 85%, which is really high for this industry. They also have quick and reliable payouts and a robust reserve that make sure those payouts are as seamless and smooth as possible. Now, if you're looking to join, go and check them out. But first, grab my coupon code TradingNut, all one word. You're going to save yourself 25% off at checkout. There's a link in the description. Go and click that now. Right, let's get back on with the show.
Essentially, it's nothing crazy. We're essentially looking for where price has reacted in the market on the 4-hour time frame, looking for key areas where prices bounced. So basically support and resistance, that's all it really is at the end of the day. And so you can see that today market opened here at obviously 3:30 my local time. It's 9:30 Eastern time in the US. And obviously we've got basically price moving down. But what we want to do is create kind of like a framework to trade within. And so we've got these levels that have been marked out. And essentially all they are is they're levels that are significant in price, where price has reacted multiple times. And we're literally just marking out the wicks to the bodies like so. And essentially that's all I'm looking at. And I'm looking at key areas to trade within. We've also got this 4-hour zone here as well. So you can see price reacted here, and obviously it's a big swing point in the market. So that's also a key area to look at. And then if we look to the left, this is all clear price. And then I have brought through some elements of ICT into the strategy, believe it or not. But essentially, you can see that there is imbalances in the market that need to be filled down here. And so the market is likely to gravitate towards those. Again, those aren't hard rules within the strategy. They're just kind of like extra confluences that I look at. And so because we're trading below this 4-hour zone, we've got a lot of clear movement, a lot of clear space to the downside. And so that's essentially what I was looking at before I hopped onto the lower timeframes to start framing out my trade. Now, the only 2 timeframes I utilize is the 4-hour to frame my time frame, to frame my trades roughly. It's kind of what I like to say is that it's kind of like when you're sketching a face, you draw that circle and you draw the cross with in the middle where your eyes go, and then at the bottom somewhere in the middle you draw your mouth, and that's exactly what this is. It's just a guideline. Some people's look different, but you will find that if you give a group of people the task to label out these, you'll have similar zones. And even if they're not exactly the same, you'll find that a lot of them take these same trades because it's within such a specific time frame. And so when I drop down to the lower time frames, essentially market opened here where this white line is, and the window in which I trade is essentially after New York Stock Exchange open. And that is roughly 45 minute window after that I trade. It can go on to about an hour, sometimes hour 30. That's the max that I will trade. But generally, the trades finish within that 45-minute window. And so what we were looking at right here is the market opening over here with this 5-minute candle. And now the first rule of the strategy is we do not trade this first 5-minute candle. We do not trade that first 5-minute candle. We wait for it to print. Okay, because there's often manipulation, there's a lot of volatility within that first 5-minute candle. Now, the second rule within the strategy is that we're not trading into these 4-hour zones. We're not going to trade into these 4-hour zones that we marked out on the higher time frame. So, for example, if we get into a trade here and we're taking buys, that's against the rules. We cannot do that. There's a brick wall here. Whereas there is basically infinite space to the downside. So as long as we are below this area, sells is what we're looking at. Now, the next rule of the strategy is this 50 simple moving average. This 50 simple moving average obviously can sometimes work as a support and resistance, but generally what it's going to do is give you a direction. Okay, if we are below, simply I'm selling. If we are above, I'm buying. It's that easy. Okay, now the other kind of soft rules to look at, now those are the hard rules to look at. The soft rules to do with this 15 moving average is that we want it to be pointing down. Okay, if we're taking sells, if we're taking buys, we want it to be curling up. Okay, it's a soft rule because there is quite a bit of discretion with it. And the other rule is that we do not want to be trading when it's too overextended. Okay, and that again is a soft rule. Okay, so that's if there are other confluences in place that kind of make it look like a good trade for other reasons, then I will still take it. All right, and so essentially those are the soft rules and the hard rules. Now, in terms of entry, this is the entry. All we're looking for is a recent support and resistance on the 5-minute to break out and retest. That's all we are looking for, right? So in this case, after market open in this window, where is the most recent support and resistance? So we've got one up here on the 5-minute. We've got a potential resistance that can turn into support. And this is the area that I had marked out over here. Okay, so we had price reacting to this. I did not touch any of this. We could have taken a trade up here again, but because this was the 5-minute open, the first candle for CME, I was not taking any trades. We also were waiting for news to happen, which I believe happened here, roughly here, not much of a reaction. So that was PMI, and we didn't get much of a reaction. So after that, we were good to take trades, okay? And this is all within the first 20 minutes of open. And so what happened now is price kept moving, and we're waiting for price to break through. Now, essentially, what I was looking for is for price to then push into this area of resistance, support turned resistance, and essentially I'm looking for a reaction. Now, what price likes to do is hesitate at this zone, can push through a little bit, but it must hesitate and then it must reject. And that is where we can get in. So essentially, that's what I was looking for. And what happened on this occasion, as you'll see on the next candle, is that price literally tapped the zone. It didn't even, like, literally a micro pip, tapped it and went. And so I ended up missing that. I'm used to price literally pushing in a little bit, then halting and rejecting this area, and at which time I get in on the rejection. But it was so quick to happen that I missed it on stream. Again, I took this all live on my stream as well, if you think that I'm talking nonsense. I'll also ask Cam to post the screenshot of my trade as well on CTrader on my Ascendex funded account. And essentially, what happened here was price tapped the zone, barely even tapped the zone, and essentially went straight down. So then what I was waiting for was price to come back in and start to reject the zone once again. And now, this is why I say with this strategy, you can't actually bar replay backtest it, because you need to see price play in real time. And to do so, you're going to need to have either a small private broker account or have a very, very small demo account to test this on for a month to become proficient at it. That's what I recommend to all the people that have learned this strategy so far. And it honestly does even better because you can see the results for yourself. So essentially what happened is price tapped in, started to react. It happened so quickly that I could not get in. And so I'm waiting for price to then push back into that zone. All right. And what you can also do, and this is something that I often do as well, is drop down to the 1 minute and watch price react on the 1 minute. The only reason I don't like doing that is sometimes you get stuck on that 1 minute time frame and you miss an entry. And so I'm literally waiting for price to tap the zone here, this blue zone, hesitate and start to drop. Okay. What price sometimes does is push straight through pushes straight through without hesitating or rejecting. And in that case, it's an invalid trade. So that's one of the hard rules as well. If price just pushes straight through, then we are not taking that trade. All right. And price sometimes does. And sometimes I get cocky and I get in on this huge green candle for a sell without hesitating or rejecting, and I get wrecked. That happened last week, I believe. So it's very key that you wait for price to hesitate at your zone and reject. This is the key sign that there are orders waiting there and there is some fuel to move the market in your favor. And so what happens next is that price taps and starts to reject once again. And so I got in roughly here on that rejection, okay? And again, if you guys think I'm BSing, I'll show a screenshot of the actual trade on my Ascendex live account. I'll get Cam to show you that. And essentially got in here, all live on stream, and price just went straight down, okay? And what happened was as soon as we got to 50%, so a 1-to-1, which is roughly here, as soon as price pushes through, it can't just like wick it. It needs to push through quite aggressively. I will then go break even. We went break even at this point. All right. And essentially, once we break even, we just wait for it to play out. It came back, filled this zone a little bit. And just like that, we took profit at that zone. And it's actually kind of crazy. Hindsight's always 20/20, but this trade ended up literally just going through the floor. Again, the strategy is only capturing this 1-to-2 risk reward. Okay.
And how did you work out the stop losses? That's my question. Like, so you've obviously that's very dependent on the risk to reward. So what's the key there?
Yeah. So the stop loss, I was getting there. Essentially, I use a maximum of 23 pips. Okay, stop loss. And again, so in terms of discretion, with this, 23 pips is my max with stop. It's 23.25 is my max. So stop was here. And essentially, it's anywhere between 15 and 25 pips. And in this case, because we had like quite a lot of imbalance up here, I wanted to make sure I had the maximum. So we were sitting with about 26 pips stop, and essentially just targeting a 1-to-2. So that was essentially the full trade. And again, the max that I put as a stop is about 23 to 25 pips. Essentially, that's based on if there is some structure or if there's a bit of imbalance that I want to try and fill and that I want to try and protect. And yeah, I mean, this trade just went through the floor. So you kind of look back and you're like, oh no, but you need to know that you're playing the numbers game and that you only want to take your piece of the market. And with this particular risk reward system, we've had over a 70% win rate over the last 7 weeks, which is.
And how often would you say you'd have a no trade day in a week? So like if you had 5 days of the week, how many of those wouldn't you get a trade entry?
There's a trade almost every single day. Sometimes there's one no trade day. Max I've seen in a week is 2 no trade days, but generally there's a trade a day, sometimes 2. I like to keep it to almost taking 1 trade a day, but on some occasions when the setup is right, I will take 2 trades. That is my max cutoff.
And how often would you go from like a move stop to break even and get the break even hit, and then it goes on to become the 2-hour trade that never would have hit your stop loss?
Not often. So when price is kind of overextended, it depends on whether price has gone far. So for example, if price just rejects that 50%, so if price gets to a 1-to-1 and wicks it out and comes back, then I'm potentially looking for a re-entry. But if price has pushed through that 1-to-1 and gone more than 75% of the take profit, then it's kind of overextended and we're kind of catching a falling knife at that point. And it also depends on how far away from the 50 SMA we are. And so in a case like this, the reason I thought that this was a great time to get back in. Again, we wicked out this one-to-one here. So literally wicked it out. And so I felt safe getting in on a rejection here. Again, watching for the rejections in real time kind of really gives you an edge because there is something there. You know that there's something there. And there's been a lot of times that waiting for that rejection has saved me because sometimes price just smashes straight through.
Yeah. I've seen it as well. Yeah, I've seen it as well. Both those things. So the 1R thing, so like the 1R traders getting out at 1R and price obviously retracing back in, but only to take people out who've moved their stops at 1R to then,
Correct.
take them out to then and then you can carry on for the rest of the move. So that's a great example. And hopefully folks there can sort of take away a whole bunch of new information and knowledge. And if not, go and find out more from you. Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Now, Ethan, thank you very much for sharing. What's the best way to find out more about what you do, who you are, and where they can find you?
The best place to find out more about me is my YouTube channel. So look for me at Garland Trader on YouTube, and then Instagram as well, garland.trader.
Now, folks, if you do want to actually find out what Ethan's previous videos have been like, then check out the link below, because what we'll do is we'll hook up his YouTube and Instagram on that page, and you'll be able to watch the other videos he's got. And in fact, what we'll do is we'll chuck one up here right now for you to go and watch as well. Folks, thanks for watching, and we'll see you in the next video.